Welcome back, traders. In this video, we are diving into a tool that can really help you understand when the market is about to make a big move, and that is the range expansion index. Now, if you've been struggling to identify breakout points in the market, this is a tool that could change the way you trade. So we're just going to go over exactly what the range expansion index is, how it works, and how you can use it to improve your trading strategy. So make sure to hit that like button, subscribe to the channel, and let us get into it. All right. First things first, what exactly is the range expansion index? The range expansion index is a technical indicator that is designed to help traders identify periods of increased market volatility. Specifically, it focuses on the range of price action and helps you detect when the price is moving in a way that suggests a potential breakout or significant price movement. You know, one of the toughest things about trading is knowing when the market is about to shift or make a big move. So that's where the range expansion index comes in. It essentially measures the strength of price movement over a certain period of time, letting you know when volatility is picking up. Now let's take a deeper look at how the range expansion index works. Okay, this indicator works by calculating the distance between the highest and lowest prices over a given period. When the market is moving within a narrow range, when the market is moving within a narrow range, the range expansion index will show a lower value. However, as the market begins to break out of that range and experience larger price moves, the range expansion index will rise, signaling that volatility is increasing. To put it simply, this indicator is designed to give you early signs of a breakout. Now, as you can see, the indicator could be, in the form of a line. It could also be in the form of a histogram. So whatever the case may be, you just have to understand how to interpret its dynamics, okay? Now, this indicator tells you when the market is moving in a way that could lead to a big price shift, so you can make more informed trading decisions. When the range expansion index increases, if it is in the form of the histogram bars, you watch out for the length, the increase in the length of the bars. If it's in the form of a line, you watch out as for the line increasing in the value. Look at the values on the right hand side. Ensure that the value is rising. So when you have an increase, it signals that price volatility is expanding. You can see what is happening here. You can see the increase in price volatility. All right, and that might be a good time to consider entering a trade. You can see during the periods of increase in volatility, that's a good time to enter a trade. If it is when there is a sell signal, if it is when the price is giving signs of a bullish exhaustion, then you can consider a sell signal. But if it is when price is giving signs of a bearish exhaustion, then you can consider a buy signal. Okay, now that we understand what the range expansion index is and how it works, let us just talk about how to use it in your trading strategy. This indicator is it might not always be readily available on your platform, so you might have to download it from an external site, from a third party source, and add it to your platform. Okay, now pay attention to the readings on the range expansion index. When the value is low, it means that the market is experiencing narrow price movement. When the value is high, it indicates that the market is becoming more volatile and the price is expanding significantly. Okay, so you should also be looking for confirmation with other indicators. It's also important to look for confirmation with other indicators. Okay, For example, you can combine this with the momentum indicators like RSI or MACD to get a better idea of whether the market is likely to continue its move. If the range expansion index is showing high volatility, but your momentum indicators are not confirming the same direction, it might be a sign to wait for a clearer setup. Okay? Now, as with any indicator, the range expansion index is not perfect. While it can signal potential breakouts, price action can always change unexpectedly. So make sure you always use proper risk management, like setting stop loss orders and never risking more than you are comfortable with on each trade. So why should you use the range expansion index in your trading? Well, there are several reasons why this indicator can be a game changer, okay? One is early warning for breakouts. The range expansion index helps you identify when price volatility is increasing, which can be a sign that a breakout is imminent. Okay, so by catching these signals early, you can position yourself to take advantage of large price movements. Okay, also using the range expansion index can help you better understand the underlying momentum of the market. It gives you a clearer picture of whether the price is likely to continue expanding or if it is running out of steam. When you can accurately identify periods of volatility and potential breakouts, you are more likely to make confident trading decisions. So the range expansion index helps reduce the guesswork and gives you more information to work with. Whether you are a day trader or a swing trader, the range expansion index works across different time frames. It can be applied to short-term trades or longer-term trades, longer-term setups, making it a flexible tool for various types of traders. Okay. So as you can see, in this particular scenario, you can see that the market was trading within a narrow range here, right? And the range expansion index was showing a low reading. So this means that the market was relatively calm and there was no major movement happening. But look at what happens. Look at what happens at this time when the range expansion index began to spike. You can see that it indicated that the price volatility was picking up, and you can see what happened, right? As the range expansion index rises, it signals a potential breakout, and you will notice that shortly afterward, we actually had a breakout to the upside. Okay, here again, the indicator came down and then went back up, and you can see this spike all the way up to this resistance zone. But remember, it's all about using the range expansion index to spot moments when the market is becoming volatile and combining that information with other indicators to make a well-informed trade. And traders, that is a wrap for this video on the range expansion index. We've covered what it is, how it works, and how you can use it to spot potential breakouts and boost your trading strategy. If you found this video useful, make sure to hit that like button and don't forget to subscribe if you have not done that already. There is plenty more content coming your way to help you take your trading to the next level. Thank you for watching, and I'll see you in the next video.